Hello and happy Monday, everyone. Here we are with another episode of Making Money with Benzinga Pro. I'm your host, Jonathan Mallard, and we have a special guest today, Andy Cole from Mighty Soldier Trades. We're going to talk a little bit about trading process for scalping off of news, really fast trades. So get ready for a great show. All right, here we go. And here is Andy. Welcome, Andy. How you doing today, man?
Hey, what's up, Jonathan? I'm just we got this Twitter space going on, but anyways, good to see you. How you doing?
You too. I'm actually testing out the Twitter Spaces as well. So thanks everybody for bearing with us as we try out this new format with Twitter Spaces. I'm actually like on my phone here and YouTube at the same time, but just want to get this message out to everyone, everyone that we can, because trading process is so important. Just knowing where to start with your trades and then how to execute those with discipline so that you're not being run by your emotions. I don't know. I mean, you've told me, Andy, about some of the ups and downs you've been through, and I can definitely relate to that as well.
Well, Jonathan, I'm not sure if this Twitter space is going to work because I keep hearing you through this. I put it through Bluetooth to get it off my phone, and it cannot turn the volume all the way down to even make it happen. But yeah, it's good to be here, and yeah, this is just sorry about this, guys.
No worries. For everyone on Twitter, maybe we'll touch base with you next time. We'll get this working for the next session. So yeah, tune in at Benzinga's YouTube right now, and you can see the rest of this. It'll also be recorded, and then we should have part 2 coming up tomorrow. And I see in the YouTube chat, welcome Jeremy, Oscar, Shelly, Mike. Good to see all of you in there. So Andy, obviously I've been with Benzinga Pro for 4 years, and you've been trading professionally for a while. You use Benzinga Pro. Do you just want to introduce yourself to everyone and tell them a little bit about your trading journey?
So basically, my whole thing is, I started trading. I made every mistake I could possibly make, and like I was telling you earlier, if there's a new mistake to make, I will probably end up making that as well. I try to learn everything the hard way. Actually, when I play video games, sometimes I'll purposely lose just to figure it out so I can, get better at the game. And that's kind of how I've done this with trading. And I'm a very curious person, so behind the scenes is what I've really been interested in. I want to know how this works. What is actually happening. How does order flow really work, and pretty much everything like that. And I found in the end that risk management is the only thing that really keeps us alive in this, keeps us growing, and just everything is based on risk. And for me, that's position sizes. I've heard people say, professionals out there, they say, if you're not stressed, if you're not having any anxiety at all in your trades, that maybe your positions are too small. I say there's no such thing as a too small position, because in the end, what are we doing? We're trying to protect our capital. If you've seen the drawdown chart, drawdown recovery, you lose 90%. You got to get 900% to get back to where you were. And a lot of people start off, and that's exactly what they end up doing. Their $10,000 account. Just throwing that number out there. They get all the way down to $1,000. They still think they have a chance of getting back up there, and sure they do, but it's going to take them forever. Or they gotta, do these Hail Mary, swinging for the fences type things. And I'd like for everybody to understand that you can start off with small position sizes right off the bat, learning to collect a dollar first, maybe even change and work your way up. So if I can't make $1 consistently, I shouldn't be going for $10,000 consistently. It's basically like, I want to learn how to pay a bill, fill a tank of gas first, and if I can do that consistently, maybe I can do a cable bill and a gas tank,
Right.
And basically that's my whole thing. I've just learned along the way that position size and risk management is what matters the most.
Yeah, that's a great point. And so, in terms of, you have your risk management, and your position size that you talk about. Now, when you're talking about day trading, I've heard of different people discuss risk units. Do you pretty much have like your standard amount of? I'm not asking you what that amount of money is, but do you just pretty much know, all right, on an average trade I'm going to risk this much money, and then I can scale it up or down from there?
Well, I mean, it depends on what I'm trading, what the volatility is. I'm going to grade the stock. If I'm trading a penny stock, penny stocks are often I'm up, they see me, I'm down. So you get an alert for it, and if it hasn't formed some strength, I don't know what MULN. I think it's MULN, but I don't know what it's doing right now. Currently, I think it's working its way back up towards resistance as we speak. But pretty much that one throughout the whole day, we pulled back. We found a little bit of support in this consolidation, this long stretched out consolidation. And that gives you a little more confidence in something like that for a penny stock. But if you just have a spike that comes across the squawk, which I love the squawk, Charlie's amazing. Um, you know, that is oftentimes going to be something that as soon as you touch it and hit the button buy, it's going to drop. And then from there, it drops below the 65 on the 15-second. If people aren't familiar with that, I know that most people say 15-second charts are garbage or whatever, but check them out. You'll find out. And once it does that, once it rejects off that 65, it comes back up. It retests it as resistance rather than support now. And then it drops off the 200, does the same thing. Then it drops off 365, and then it's down to hell. It's like just this thing just keeps on going down. And I want to make sure that I'm not putting a huge position on that's going to punch me in the face that I haven't found any strength in. And I'm not going to keep adding into that loser as well, because that's what most beginners do. They're like, oh, this is going to go up though. I really believe in this. It's not about what we believe. It's about protecting our capital. Number one, no matter what, it's always about protecting our capital.
And so I'd love to get a little bit more into that and maybe bring up some charts if we're able to towards later on in the show. But maybe let's just start from the beginning. Where do you first start looking for potential trades? I mean, I lots of times use the movers tool on Benzinga Pro just to find things that are gapping in the morning, or you mentioned the squawk. What do you use?
Well, Jonathan, first of all, in the morning, before I'm even at this desk, we have Charlie going on the squawk. I'm listening to Charlie all morning. If I'm not here really early in the morning, I'll listen to pre-market prep and whatever these guys are saying. It might give me some ideas for the day. But once I get here, one of my dedicated screens, I have 3 big monitors, and one of them is Benzinga Pro, and I have the audible alerts, so price spike and stuff like that. Halts in what is it, the signals tool. That lets me know anything that's halting, and that can give me a relative idea if there's a penny stock or a small cap stock, something that's really going to be a mover. I should look at that and check that out, because a lot of times some of these really big movers in penny land, they're hitting the halt scanner several times a day. So as soon as I hear a halt, I'm checking that out. Charlie on the squawk, he says halt.
Do you want to share that? Do you have the ability to share your screen, or I could share my screen if that's easier?
If right now for today you want to share yours, Jonathan,
yeah, absolutely. So I'll just share my screen really quick, because for anyone who's brand new, they might not really know about the signals tool. And by the way, any one of you can follow along with a free trial if you don't already have a subscription at pro.benzinga.com. So I guess we're all bright and sunshiny today, but you can see that I have Benzinga Pro up here, and I'm just posting this in the chat as pro.benzinga.com for the free trial. So check that out. And I'm opening up the signals tool. So you can see here, there's all these different price spike signals for where it's spiking up or down within a 1-minute period. And what Andy was talking about was this halt and resume signal. Now, you could filter it down. So if we're looking for penny stocks specifically, we could look at filters and then apply a filter, and we could say like price per share, or maybe depending on what you trade, maybe you want to filter out penny stocks. So you could. It looks like the default here was $100 and up, so I can get rid of that. So you could filter the signals tool by a watch list, price per share, sector. you name it. But it's really helpful for finding automated signals like these halts and resumes, price spikes, highs and lows, things like that. And then in terms of the squawk that we were mentioning, you can see here inside of Benzinga Pro, I'm zoomed, or I need to zoom in, but in the upper left corner, I've got squawk equity. I just click on that play button, and that's how you can turn on the audio squawk. So Charlie is a real person. He's been doing this for over a decade, and he knows exactly what to look for in the markets. And you can, lots of times you can play that to the upside or the downside. Everything from the overall market catalysts like economic numbers, Fed decisions, to FDA approvals on penny stocks. So kind of everything in between there.
See, one thing I would say about the squawk is, everybody trades the way they're going to trade, and I don't want to tell you guys what to do at all. But I've learned over time, I want to wait and find some sort of strength, not just some spike. Like a lot of times it'll come across the squawk. Charlie gets to it really quick. He's amazing at that. But just because it comes across squawk doesn't necessarily mean we want to trade it. We want to find out that this thing is not just spiked up and it's going to go back down where it started. And a lot of times in penny stocks, what will surprise you is it will not only go back where it started, it'll go lower than where it started and continue down to the abyss. And you're just like, oh my gosh, I cannot believe, like XBIO, I think earlier on, or a long time ago, anyways, probably like 4 years, anyways, something like that. I traded XBIO and I added into this thing because I was like, I believe in this. I know this is going to be so cool. This is going to be the best day ever because I just had a really rocking day before. And I added a little bit into it. Then it went to support, and I'm like, okay, there's no way it's going to go lower than like this 10 or 20 cents below support. And it went down and tripled the whole move to the downside. Yeah. And I ended up being a bag holder for, I don't know, years, I think, on that. And I just sat there and watched this loser. And finally I was like, you know what? It's not even good for me to be watching this thing. It's not helpful at all. It's just not good. Just get rid of this thing, cut my losses. And I had to learn that cutting losses is the most important thing. Having an idea of where I want to stop out before I even get into it. Don't just buy a stock. Make sure that we have an idea where we're going to go to the downside and how we're going to take a profit and how we're going to manage that loss and how much money we're going to lose. Worst thing a trader can do is get into a position and not think first and make the decision that I'm only going to lose such and such amount of money. That might be $10 for you. You might say, I can only lose $10 on this position. Do it. Make sure you stick to that. That's the number one thing. You were bringing up signals. Another one is you could put, well, first of all, for the halts, I like to have my own its own signal box. That way I can turn on audible alerts for that because it will tell you audibly that there's a halt. So you can look at your screens and your broker, and you don't even have to look at the halt scanner. You can hear when they're going off, like the squawk.
Nice, kind of like with a synthesized voice alert or the sound alert.
That's one of my favorite things about Benzinga Pro. And I know we got our friend Mike, the blind trader, and it probably helps him out a lot. He has degenerative eye disorder, and he probably really, I think he's told me several times that he really appreciates having the audible alerts. And something else we're using in signals is new high. I mean, that's really where it's at. You want to know what's making a new high in the market, where the movement is, where the action is. I love volume, looking for high volume if I'm looking for penny stocks, and I want to know what's making a new high. Or new low. It depends on what you're going for. But this is just, it's not going to slip by you if you're looking for new highs.
Yeah, and you can see it's very sensitive with those session highs, session lows. So yeah, anytime that's making a new high or a new low, it'll be right there in the signals tool.
See, same thing with that is volume B scanner that I have. The volume B scanner and it's not necessarily about being able to click it and pinpoint precisely. You can see that if one ticker comes across several times, if you keep seeing the same name coming through there, that's something I want to take a look at. It's not that I need it to go slow enough so I can click each one, but if you do, you can slow it down by putting which one is it, Jonathan? Sorry. For the new highs, I think you could put session high, right?
Right.
Or session day high series.
Session low. And then, there's day high series is where it's continuing to move in the same direction.
Yeah, the day high series, it'll filter it down a little bit more, I think, so where you're not getting all these redundant alerts in there. But again, for me, Sometimes I do it, sometimes I don't. I don't mind having it like just going wacko with a bunch of tickers, because if I see that same ticker over and over, that still gives me the idea that that's what I want to check out.
Awesome. And so there's all of these different directions that we can look in, whether we're talking about spikes, new highs, halts and resumes, news catalysts. How do you prep yourself to basically obviously the one thing that you mentioned was know the amount of capital that you can risk. Like if I lose $10, I'm out. If I lose $100, I'm out. Whatever that dollar amount is. For some people, they might use a percentage, but that translates to a dollar amount, right? Um, how now? What's next? Once you decide, okay, this is the amount of money I'll risk on a trade. Um, how do you go about choosing which one you pull the trigger on?
Well, for me, we get these spikes, and I can look for an immediate pullback. And with my speed and with the position size, again, I'm grading it, so it's a little more risky at this point. I'm going to go even lighter on my position size. If it doesn't work out, I'm just going to cut it and move on. But at the beginning, when it first spikes, if we get a pullback and I'm like, that looks like a really nice pullback, I'm going to try this out. I'm going to go so light that it doesn't matter if it falls or destroys itself, because it's really not going to hurt me too bad. But what I think we want to look for in penny stocks is something that's spiked, it's pulled back, it's found some sort of support. You can see that it's consolidated over a long term, maybe like MULN or something like that, and we're approaching resistance on that one right now. But that's what we're looking for, something that we can see it's spiked, it's pulled back, some sort of long stretched out consolidation of some sorts, and then you would look at the 5-minute. Basically, sorry about that, Jonathan. I would look at the 5-minute chart as my primary chart for penny stocks. I always want to look left on the daily, and I always have my 15-minute just for fun in there, because there's a lot of, you can see a little bit without all the noise on the 15-minute as well. But the 5-minute in my daily is my go-to to where I start as far if I'm trading some sort of small cap stocks.
That makes sense. And you can see how it lined up here, like with MULN. Like, I'm no rocket scientist, but I can line up previous highs and lows.
Exactly.
Like, I just don't think that it's an accident that if I look at one of these pre-market lows here, that it just happens to be the same area that it bounced off of later on in the trading day. So and you're mentioning those pullbacks. Is that basically just what you're looking for in a pullback, where it seems to have some upward momentum here, and then it pulls back for a potential bounce off of a support level?
So basically, we're up, we've pulled back, we found a support level. That's the most important thing, and that support level holding. And it could be any sort of patterns. It could be rounding bottom, rounding out. It could just be a bull flag consolidation. There could be a bull flag presenting itself more bullish than others. Whatever these patterns are that people look for, it really doesn't matter. It's all the same story. We found a nice little support area, and if it holds, our thesis and our plan, is that we can either take profit back to a predictable area of resistance. That could be from MULN, right? That support that you drew there. I think you put that line in there. And then even for me, I would go for a lower high. And there's multiple things that I'm going to look for. I could look for a VWAP rejection first, something to deal with moving averages, upper and lower Bollinger Bands, just there's all this assortment of indicators and stuff that you can use to give you these ideas as well. I use the 65 EMA, the 200 EMA, and the 365 EMA on nearly every chart. I also throw a 15-second chart in there because I want to be scalping. I'm going to be trading fast. I want to be able to see things faster. Like, if I see a 5-minute chart, you'll see a pullback on that off the highs. It looks like the most beautiful pullback you've ever seen in your life. You look over at your 15-second chart, you see that it's just below the 65 EMA, and it's rejecting off the 65 as resistance. And that's like, no, I'm not touching that, because I know that once a penny stock rejects off that 65, a lot of times it's going to keep rejecting and going down lower. So, I got these EMAs and the Bollinger Bands and stuff like that, but these are just road signs. They just let us know that basically where you are on the stock. If we break out of the Bollinger Bands like that could be pretty interesting. But we could also predict in most cases that we're going to reject off the upper band. Similar story with the Keltners, actually.
You said similar story with what? Oh, Keltner channels.
Yeah, I'm not trying to get too crazy here with all these indicators. For me, my main thing is just upper and lower bands. I get rid of the mid. I make them so transparent that I can almost not even see them. So I'm mainly looking at the candles. I'm looking at candle by candle. Are we making a new high candle by candle? Are we making a higher high, a lower low? Where are we at as far as that goes for how the candles are working themselves out? I'm probably getting way too much into too much at once, but that's basically it. Just using these indicators let us know where we at. Do we have a predictable area of rejection or resistance? Have we found some support where we can take a trade? Have we pulled back and made an inside candle, and then we broke the highs of that previous candle, and then we're working our way up, and I see the 65 coming, so I'm like, okay, I'm going to take profit just shy of that 65. I always want to take profit just shy of whatever targets I'm going for, because I don't want to be the guy that's trying to get out when it taps it and it's already just shot down. It's happened to me so many times in the past, So I want to make sure that I'm taking my profit a little shy of whatever that meat. I want to leave some meat on the bone, pretty much.
Right, and just for our beginners in here, when you're talking about an inside candle, do you see any obvious examples here for MULN?
Basically, right back where you were there, I would just consider that a series of inside candles back at where the big red drop was back there. I think you have to zoom out for it, but yeah, right there where you're at. But anyways, basically the big red candle, then you got these little tight candles down at the bottom, and it could be a hammer, it could be whatever anybody wants to call it. But I got these little tight candles at the bottom of a big, nice, juicy red candle. And then I'm looking to see, are we going to break the low of that little candle and go lower, which we did at first, or are we breaking the highs and maybe possibly having a chance to go retest the highs or work our way back up higher?
Yeah, we can see how they went down beneath this general level of this orange line and then got pushed back up by the buyers. And then the next one, you have this little green candle here to regain a lot of what was lost there.
Right. And another thing is, looking for upper shadows and lower shadows, what people call the wicks. The lower shadows tell me that price was unable to hold there. It would be like an army gaining ground and then getting pushed back. Mm-hmm. I love to see that the price is pushing back ground that it had previously been in, because that tells me it's probably not able to hold there,
Right. Yeah. And that's so important, just understanding the real story that it's telling. What's the actual story there of, it's not just a candle, it's showing, forward momentum or being pushed back into a retreat there. So basically you find these charting patterns, you find where the support and resistance levels are. And so it's a convergence at the same time of, okay, I've got a chart pattern that looks like is set up for some positive or negative momentum. And then you've also got those indicators where you can see where you're at in that storyline of the tension between the bulls and the bears. And then one thing that you brought up on our phone call was how you got to get in and get out before the institutions mess it all up, or the market makers mess it all up. Now, I do a lot of webinars with Nick Shaheen, and his whole thing is basically trading like a market maker. He's kind of I'd say on the flip side of the coin in a lot of ways, versus whenever I talk to you, you talk about get up and then get down as quickly as possible.
Well, it's not necessarily as quickly as possible, but being able to see that I've gotten in a position, I can now look at the level too, and I can see numbers flipping all around, and I can see them gearing up for what I've seen so many times before, and that's them turning against me. Sometimes whatever's going on in the background, whoever's the smart money, the big money, whatever it is, it takes them a little longer to react. So it could be a few seconds. I'll be putting profit for a few seconds. And then, I see these things happening where the level 2 is turning. I'll look over at Flow Trade and I'll actually see the flow index, the algos, the smart money there starting to curl against my position. And that gives me the idea that, hey, this may be something that's about to not give me what I want, but do the exact opposite. So I got to now decide, do I want to just hop out of here, or do I want to go along for this ride, wait it out or whatever? And that's why I want to make sure that these stocks are up against the wall. I want to make sure that I got them in a position before I want them to not have any wiggle room before I even get there. If I just grab these anywhere on the chart, most likely they have a battleground, and whoever they are, that's just other traders. They could have more money. They're more sophisticated, maybe not. But either way, what's the battleground, and how far can this stock go against me, and or how far can it go up for that case? But I got to establish before I'm even in this thing, how far can this thing move in both directions? And then I got to go from there. But I want to make sure that I'm choosing this at a time where it's backs up against the wall. So where if it does turn even slightly against me, I know that I'm not going to hang around very long. I need to get out of that thing. There's no point in sitting there, risking it, waiting it out, and then it shoots down. And now I'm sitting there, going, man, I'm bummed. My day just sucks.
Mm-hmm. And so we talked about the dollar amount for when it goes against you, but what about when you're right? So what about when the trade goes the way you want it to? How do you determine how much money you're gonna take, how much profit you're gonna lock in before you exit the trade?
See, now in penny stocks, sometimes I will do just what you said earlier. I will get what I can get. I'm looking for the first available predictable area of resistance, predictable area of rejection. I don't want to sit there and I go into profit and then it starts working and bouncing and working and bouncing. I want to get in, get my profit at the first area of rejection, and then reassess if it's going to do all that moving and all that, if I want to go back and take it again and again and again. We can always get back in, right? But if I'm looking at like a bigger stock, more longer term, something like that, a large cap or something, I'm going to want a risk to reward like 5-to-1. I'm going to want to make sure that I got much more meat on the bone for my profit than I do for my loss, because over time, that's really going to work out in my favor. And again, still making sure that it's back up against the wall. One of the things we didn't talk about that we should probably bring up, though, is for when we first see these things in the 5-minute, we want to make sure we look left on the daily. You want to know what the trend is before anything. You absolutely have to look at the trend. You have to know, is this thing on the daily or weekly even? Even the monthly. Just go look at the big guys first and find out what has been going on there. If this thing's just been dying for the last so many, actually more like this. If we saw a spike like OCGN, for example, like $15 or whatever, and then it pulls down, then all of a sudden it gets some amazing news. I'm like, oh, I got to buy that, right? I'm not looking left on the daily. I don't realize it just spiked to like $15. So, or maybe even more than $15. There's a bunch of bag holders in there. And then we have a downtrend with all these bag holders. That means that people are still holding, and this stock still has some work to do to crush some folks. And I'm buying the first available news that's like, woohoo, let's grab this. Probably not the smartest idea. I've done it time and time again, and it's never worked out for me, I don't think, really once, Jonathan.
Yeah, that's so principle there is look left.
Look left.
Always look left and see what's been going on historically there.
Look left and make sure that we are asking ourselves, is there a bunch of upper shadows? Would there probably be a bunch of bag holders in here? If we had that spike, we know people bought up there, and if they're holding, they're like, I'm an ape or whatever they're calling themselves, and I'm never letting it go because I believe in it. Well, the stock's telling another story. You can go ahead and believe what you want, but we're getting lower and we're taking away your profit more and more. The power in your account, the power in your margin, if you're on a margin account, whatever, it's decreasing day by day. So it's really not the best idea to just grab the first available news when we have something like that. We want to see some sort of confirmation, some strength,
Yeah, absolutely. Well, Andy, time always flies by whenever we're chatting. It's always great to have you on here. And if you're available for a part 2 tomorrow, I might even compile a few slides from the talking points we covered today, and we can dive more into the meat of some additional ways to structure your trades tomorrow at 3:00 Eastern time. So thank you, everyone. Thank you, Andy. Be sure to follow him on Twitter at Mighty Soldiers, and then we'll have more for you tomorrow at 3:00. So until next time, happy trading.